we've always had a relationship with AppNexus on a smaller scale, but they've been a very important technology partner to us. And we're not creators of technology, we're appliers of technology. So we take technology like AppNexus's technology, with lots of other examples, and apply it to our business. And when we acquired 24/7 Real Media in 2005, we started to build our own platform. It went through several iterations, B3 I think it was originally, then the MIG platform, and now it's Xaxis. And the technology that Xaxis was using and applying was AppNexus. And we had a very, very small equity stake. So we thought it made sense to swap assets that we had inside Xaxis, which were basically technology assets, and bring that into AppNexus, and we've swapped that, and with a little bit of cash as well, I think it's $25 million, to acquire 15% on closing of the AppNexus company. So what it does, it gives us a very significant equity stake in a business that we've worked with for a long period of time. And I would liken it to a technology backbone to our Xaxis platform, which, as you know, is the largest online audience buying company. It's not simply programmatic buying. To say it's just like Rocket Fuel or Criteo would be a mistake. It's more than that. It overlays data and technology on top of a programmatic platform. But Xaxis has become the most powerful, biggest global platform, online media planning and buying in the world, and we're very keen to develop it. So it takes us to another step, and of course we're just a small company capitalized about $28 billion, $29 billion, competing against companies like Google at $400 billion and Facebook at $200 billion, with much deeper pockets and obviously very significant technology resources. But my view has always been from the beginning that Google and Facebook are not technology companies, certainly in competing with us. What they are media owners. So you wouldn't give a media owner, a legacy media owner like Bob Iger or Rupert Murdoch or Philippe Denon or Les Moonves your media planning and say, you know, plan and buy for me. It doesn't make sense, we think. It makes sense to be agnostic and to be agnostic across all the potential opportunities in online media buying. And that's what we're doing with Xaxis, that's what we're doing with AppNexus. So summarizing it, long-term relationship, we've swapped an asset, OAS, which gives us a bigger stake inside AppNexus, gives us a chance to develop even stronger platform to compete with companies like Google and DoubleClick and Facebook and Atlas. We've gone against the idea of open exchanges. We've always made this an opt-in basis as well, because we're not disclosing the price of the premium inventory that we buy, but our clients know the price at which they buy it, and they can compare it to the market prices that they pay, and we know from our own research that the prices they're paying for the inventory that we buy is 30% less than they would buy in the open market. Open exchanges, there is the fraud issue. There is that concern, and we've said we're going to just negotiate and invest in private exchanges. I mean, that position is the same position as Group M has taken on C+7 as opposed to C+3. We think the growth of these alternative audiences, these alternative devices, means that measurement should be changed, and we think that private exchanges are also important to prevent the fraud and the misleading buys that take place, and that's a view that we've taken. But essentially what we're trying to do is to provide our clients with the best alternatives on, as I said, an opt-in basis. There's been some mistaken statements as to what the model is and what it isn't, but that's basically what I described.